Good morning, ladies and gentlemen. Welcome to this special coverage on Business Today Television for the Budget Day. I'm your host, Shail Bhatnagar. Finance Minister Nirmala Sitharaman will shortly be presenting her 7th budget for the Modi government and her first one after Mr. Narendra Modi was sworn in as Prime Minister for a record third term earlier this June. Let's look at the background of this national document, which will be unveiled over the next 2.5 hours. There are challenges, there are opportunities, there are pitfalls and red flags. For the moment, let's begin with what the challenges are. For the first time in 10 years, ladies and gentlemen, the ruling Bharatiya Janata Party finds itself at the helm of a political coalition and a reduced electoral mandate for Prime Minister Modi. Let's see what are the points that the entire nation would be looking for. As far as the challenges are concerned, the economic survey actually posted a muted expectation as far as GDP growth is concerned for the current financial year to March 2025. Expectations are of a 6.5 to 7% advancement in gross domestic product compared with the 8.2% growth in nominal GDP that you saw in the previous accounting year. So has actually GDP growth started to fade? Personal consumption growth is just 50% of GDP growth, and that's because of the kind of rural stress that you are seeing in villages, in Tier 2, Tier 3, Tier 4 towns, and of course in the urban landscape as well. Job creation needs to accelerate. This is something that the BJP has learnt from the kind of national mandate that it got this time, a reduced number of seats from 303 last time in 2019 to about 236 as of now. Is the peak GST growth behind us? We've seen monthly GST numbers somehow now stagnate around 1,20,000 crore mark. So is this something that the market is keenly looking at, how the government boosts its GDP and income levels, and of course our corporate taxes slowing? We've seen a very fine capital expenditure from the government over the last 3.5 years, but private capex from corporates for this point of time remains missing. Passenger vehicle sale, two-wheeler sales are not up to the mark, and they are pointing to this rural stress that is visible on monthly sales numbers for bikes, for scooters, for low-level and entry-level passenger cars. Fiscal consolidation plus real rates and global slowdown. If you put all this together, are you seeing the world's fastest growing major economy looking at a local slowdown? So these are the points that Finance Minister Nirmala Sitharaman will be addressing while she presents her 7th annual budget in about 2.5 years from now. While these are challenges that she's grappling with, and as are large parts of corporate India, let's look at the report card that the BJP has put up as far as the past 7-8 years is concerned, and of course the immediate preceding 2-3 years. Well, ladies and gentlemen, this is the best macro ever. You have a current account deficit which is under control. You have a roaring stock market. You have, even though GST collections, income tax collections and corporate tax collections are showing signs of plateauing, yet these are at record levels. Core CPI inflation is at about 3%. This is something really good. And if you look at the performance of the Reserve Bank of India in controlling this inflation, it is the best amongst major economies. What is really interesting is that if you see the difference between projected inflation and actual inflation, this is the lowest in India if you look at the top 10 major economies. This is a very big plus and a pat on the back of the Reserve Bank of India governor. What else is good? The kind of revenues that the government is getting in terms of tax collections, in terms from this extra dividend that has come in from the Reserve Bank of India. These are phenomenal numbers and are helping the government balance its books in favor of growth. Now let's look at the markets, something that we do on a very regular basis. Well, ladies and gentlemen, this is a Goldilocks scenario. The best macro ever, being appreciated very well by stock markets. We'll show you a series of returns that the market has earned over the year-to-date time frame, and it's been a phenomenal rally of sorts. You've seen intense amount of wealth that has been created by stock markets, especially in PSU stocks, something which find favor both for investors as well for traders. Look at the Nifty, up about 11% over the past 6 months. When you compare it with the performance of the Dow Jones index in the US, it's up about 7.3%. And remember, 11% is something which is phenomenal over the last 2.5, over the last six and a half months. What is really interesting is that in the past 7 weeks, we've seen the Nifty appreciate 2,000 points. And that was because of the run of the budget. We've seen PSU stocks in the banking space, in the defense space, like Mazgaon, Garden Reach, Hindustan Aeronautics, so many other counters giving strong 3x, 4x kind of return over the last 18 months. We'll again dip into the market as far as prices are concerned, and then we'll look at a lot of other data that is coming in. But for the last 6 months, you've seen the PSU index rally 42%, the telecom index up 38%, the realty index 35% higher, and the power stocks adding about 35% over the last 6 months. We'll show you a lot of data, but let me first look at what is on offer as far as today's programming is concerned. Shortly, we'll be joined by Mr. Dharmesh Shah, Head of Derivatives and Quantitative Research at ICICI Securities. They are our research partner today. We'll have Mr. Chirag Shah, Vice President of Research at ICICI Direct.com, shortly joining us. And of course, a lot of other top market men and women will be with us throughout the day to not only understand the intricacies of budgets as far as the financial numbers are concerned, but to see how markets respond, what are the kind of sectors that they are looking at. Will housing outperform? Will infrastructure be at the top end of Ms. Sitharaman's speech? Will we have a lot of work to be done on FMCG? How will rural demand be boosted? What are the processes to set up new cold storages? Will the cost of doing farming decrease? Will you see higher subsidies for housing? Will you see higher subsidies for fertilizers, so on and so forth? Across the day, you will have people like Devin Choksi, Manish Dangi, he's the CEO and founder of Mosaic Asset Management, Manish Sonthalia from MK Stocks and Shares. All these people will be joining us fairly shortly. What we'll do, ladies and gentlemen, let's now dip into the day's proceedings and what we'll do is dip into the day's proceedings and start our work with the ICICI we have with us Mr. Dharmesh Shah, who's the Head of Derivatives and Quantitative Research at ICICI Securities, and Mr. Chirag Shah, Vice President of Research at ICICI Direct. This, ladies and gentlemen, is a very trusted brand which you can live the life and look at your aspirations and research back investments from ICICI Securities. Mr. Shah, Dharmesh, to you first. What are your expectations from the budget? What do you think will be the fiscal deficit number that you're looking at? And what are the 2 or 3 major announcements that you have in mind which you would like to hear from the Finance Minister about 2 hours from now?
Yeah, hi, very good morning to you and all your viewers on Business Headlines TV. So today, yes, as we all expect the 7th budget coming in from the Modi government. So the key trigger for the market would be no tinkering with the short-term and the long-term capital gains tax. So no news on that front will be a very good news for the markets. Secondly, if you look at all the budgets, the previous 4 or 5 budgets of Modi government, the sheer focus has been on inching up the share of manufacturing GDP in the overall economy. And probably if you look at the capex trends that had panned out, 1.4, 1.5 was the capex intensity ratio if you look at the period from FY17 to FY20. And if I look at the numbers right now, the capex intensity is almost double to 3.2% in FY24 budget, and FY25 the same ratio has been pegged at 3.4%. So our clear expectation from the budget is that this number should not be tinkered with.
Okay.
Even if the number goes up, it's pretty fine. But the capex focus of the government and the manufacturing-led growth focus of the government should be there. You might see some other tinkerings that might happen on the fiscal deficit side, or the revenue assumptions of the government on the direct tax collection and indirect tax collection might be revised upwards, given the kind of GST collections that we have seen, the kind of corporate and the individual tax collection we have seen, and the buoyancy in the economy that we are witnessing at this point in time. So I don't think so. The 5.1 number fiscal deficit, 5.1% fiscal deficit number will be a problem for the government to achieve, and probably will be on a decent fiscal consolidation path. Secondly, as I already mentioned, there might be some relief to the middle class taxpayers and the middle and the common man per se. So there might be some schemes that might see rural scheme or the social schemes that might see increased allocation. So if you look at the interim budget that happened in February, there was a higher allocation that happened to the housing scheme. There was a higher allocation that happened to the Manrega, where the allocation went up from 60 odd thousand to 84, 86 odd thousand crores. So probably those all schemes would be there, but I don't think so that will break the discipline of the government in terms of maintaining the fiscal consolidation. Because if you look
Right,
at the
sir.
RBI's dividend, it was pegged at 1 lakh odd crores, and the final outcome is almost double of that what they will be receiving from the RBI. So the government has a lot of cushion in maintaining fiscal consolidation, in pushing the capex growth, and also meeting the expectations of the common man. So I don't think so you can expect any much tinkering in the budget that might happen. And if that does not happen, market will take this very positively, and we might see some up move in the markets post the budget.
Right. Let's get Chirag Shah into the conversation. He is Vice President for Research at ICICI Direct. A very warm welcome to you, Chirag, on Markets Today. Let's look at the possibilities that sectors and stocks might enjoy today. What are the two or three top things on your radar when you're looking at Finance Minister Nirmala Sitharaman in her speech? Any two sectors that you have which she would address in terms of higher allocation, or any two sectors which you think might outperform in today's market, given the background that Dharmesh has provided us?
Actually, I was only answering the previous question. My apologies on the same. So I would continue on your answer, saying that the two sectors that we believe can do good is, number one, the banks, the banking sector per se, and the capital goods and the industrial sector. Because even from a macro perspective and a long-term perspective, we as a house are quite bullish on both of these sectors. Capital goods, if you see the capex intensity, as I already mentioned, the capex stand at 11.1 lakh crores from the government side, and the kind of ordering and tendering activity that is happening on the ground is quite among us. India had never seen a structural capex cycle barring the 2003 and 2008 era. And post that, we had a very fragmented kind of capital investment cycle coming into the country, and capital goods sector had suffered a lot over the last decade. Probably we believe that over the next 3-5 years, capital goods sector is one of the hottest sectors to watch out for. Though in the interim there might be some valuation richness that might have happened, but again, any correction or any dip in the stocks would present a superb buying opportunity in all the stocks. Secondly, banking sector, mostly on the PSU side, we believe the kind of restructuring of balance sheets that have happened, the amount of capital that they have, the amount of cushion that they have on their balance sheet to grow in double digits over the next 3-4 years with lower NPAs, most of the provisioning behind us, and valuation still in a very comfortable range relative to markets and other sectors. So PSU banks again will be in the focus. Again, if you see, if you look at
this budget would
and
be
if you look at the fiscal roadmap, if the market borrowing program of the government is not lopsided or one-sided, then probably we might see yields also cooling down, which will aid the valuations of PSU banks and
Right.
the banks per se.
But to me,
So
it
I
appears
believe
that the
these two
economic
sectors
policy-
are to be watched out after today's budget.
Fine. And what we'll do, Chirag, is that while both you and I discuss respective sectors, we'll play out the kind of year-to-date returns that investors have made in sectors such as PSUs, sectors such as realty. We have all that data in front of you. In fact, if you look at it from this point of view, the worst performing index over the last 6 months is the FMCG index, now at a record high and up 7%. So you can well imagine, if the worst performing index is up 7%. What are the top performing ones doing? PSUs, for instance, on an index level are up 42% over the last 6 odd months. We'll keep on showing you that data. Chirag, let's take this discussion forward. Defense, it's out of stratosphere. Look at the kind of returns that people have enjoyed on Mazagon Docks, Hindustan Aeronautics. Look at how Garden Reach has outperformed, all of them more than doubling over the last 2 months or so. When you look at this kind of euphoric markets, what do you advise your investors? Do you see defense continuing the kind of rally that it has seen over the last 3 months in the next 6 to 9 months?
Okay, so as you mentioned, there is a catastrophic move or a euphoric move in the defense stocks. I completely agree with it at this point in time, because valuations are on a very expensive side at this point in time. But if you look at the tailwinds that the sector has, it's quite enormous.
Yes.
Right. So that's what I was earlier mentioning, that yes, in the short run, or the industrial sector or the capital goods sector, which includes defense as well, might be on the richer side for to some extent, and therefore I would advise any dips should be used to accumulate rather than buying them on highs. So probably you have to also bifurcate within the defense space. You have to bifurcate where the stories will be structural and where the stories will be lumpy, and the earnings are difficult to project. So let's take a classic example of a Hindustan Aeronautics.
Yes.
If you look at the kind of margins or the kind of opportunity tailwind these guys have, probably they have a story of next 5 to 10 years. Yes, valuations have run up, but the kind of technology that they have, the progress that the indigenization that they have done in terms of manufacturing of fighter aircraft, it's quite commendable. And if you go back 4-5 years back, this company was into deep trouble, had working capital issues, had to borrow loans to repay its salaries. So one can understand how the way the opportunity has worked out for this particular company, and the way they have overcome these challenges and reported this robust performance that they have done over the last few years. So I believe Hindustan Aeronautics is a classic structural play. But yes, every bull market, there are steep corrections and they will come. And when this kind of corrections come, then there are opportunities to buy over the next 3-5 years kind of a time frame.
Okay.
So you have to be very selective in the defense space. Not all are blanket buys. So you have to be very selective in terms of buying what you are doing.
Okay, this is the chart of Hindustan Aeronautics in front of you. While 5,000 is where it closed at in yesterday's markets, remember the all-time high is somewhere in the vicinity of 5,400, 5,500, and this is after a 1:1 bonus. So the stock has actually gone up by about 4.5x over the last 2.5 years, and at this point of time, the 6 defense companies that we have from the government, which is Hindustan Aeronautics, Garden Reach, Mazagon Docks, Cochin Shipbuilders, BDL and BAML, are quoting at a PE of between 45 to 70, compared when the Nifty PE of about 23. So that is the kind of enthusiasm, that is the kind of returns that these stocks have shown, and now you have sector specific funds being launched, some of them doing pretty well over the last 1 year or so. Let's shift our focus, Chirag, on how markets are likely to see the cornerstone of Mr. Modi's success story, which is housing. Lot of expectations, and in fact the first comment that Mr. Modi made was that he was keen on constructing 3 crore more houses in the rural and the urban landscape in his 3rd tenure. How do you see the housing sector? Any favorites there? We've seen a fantastic rally in finance companies such as HUDCO, LIC Housing Finance, PNB Housing Finance. What are your thoughts from this space?
See, housing again is a nice way to play the government reforms, or the way to elevate people out of poverty. So that's a very nice theme, and probably you can either play it via the NBFC route, which finances the creation of the housing stock. And secondly, you can also play via the companies who directly benefit from this particular schemes, as you mentioned, guys like HUDCO and etc. So our preference would be to play themes like NBFCs, because we still believe the valuations are quite attractive out there, because a lot of NBFCs had problems over the last 3-4 years in terms of their balance sheet sizing, the kind of risk that they had taken. probably they have restructured themselves over the last 3 4 years, and valuations and growth prospects are quite appealing at this point in time. So we believe that NBFC would be a great space to play this housing thing in India.
Okay, and let me just give you some interesting data on Pradhan Mantri Awas Yojana, which was launched in 2015. So far, about 2.95 crore homes have been made in the rural landscape. 2.95 was sanctioned, 2.61 crore have already been made. If you look at the urban landscape, about 1.18 crore homes were sanctioned, out of which 84 lakhs have been built, and on top of this remainder you have a fresh order of 3 crore homes to be built in the next 5 years starting June 2024. So this is a huge success story that Mr. Modi has enjoyed across the India. It has given him votes, it has brought a cyclical periodicity as far as markets are concerned, and we've seen stocks such as NBCC, stocks such as HUDCO give 2x, 3x return over the last 18 months or so. Let's look at the other segment, Chirag, which is the services space. A lot of high value jobs seem to be created by three segments from overseas, which is the global centers for services, the global centers for technology, and the global centers for sourcing Indian products overseas, the GCCs, the GTCs, as also the kind of segment that we've seen on supply chain. How do you see services planning out? This is a success story that India has enjoyed over the last 3 decades. What do you think Ms. Sitharaman will do in her document to boost this global space?
See, basically, I don't think so. There will be anything separate that will be carved out for this space in totality, because you see the PLI scheme is already there, and the concept of or the notion of China plus one has to gather momentum to get factories out here, to get the global services centers out here, and the kind of is probably one area where the government can do something is on the semiconductor side, because that is the area where India is lacking. And if one needs to be a superpower going ahead, or a top 5 or top 3 economy going ahead, you need to have a semiconductor ecosystem in the country, which is currently lacking big time. So probably, and we have seen a lot of announcements by the government, by corporates who wants to invest heavily, both Indian and global. So probably that is one space I think can create a whole lot of a very big ecosystem in India, which can in turn drive employment, drive manufacturing growth, drive services growth, etc. So probably that is one area one should look out for in this budget.
Fair point. Shortly we'll be joined by both our reporters who are tracking Nirmala Sitharaman. Remember, this is a huge process. She leaves from a residence in central Delhi towards the finance ministry. From the finance ministry, she picks up the budget document, offers that budget document to her cabinet colleagues, and from there on she goes to the parliament to begin her speech. It's a very nice visual number. You see at the moment she's being photographed with her team within the finance ministry. All the secretaries are there. She herself is there, the Minister for State for Finance, sitting on her left side, and the entire financial team that's made the document being photographed for that point. I think Mr. Dharmesh Shah, head for derivatives and quantitative research at ICICI Securities, is with us. A very good morning to you, Dharmesh. A very warm welcome on Market Today. It's a day when the report card of the government for the next year and its expectations on taxes, its expectations on GDP growth, its work in progress for many sectors will be unveiled. You look at derivatives and quant research, and it's been a wonderful 18 months for the last stock markets. What do you think the budget document will unveil for markets?
Yeah, good morning and thank you for inviting me on your show. Yes, definitely I think so. Market has been some bit of a volatile ahead of the budget, and we have already seen some bit of a profit booking on the Friday trading session. But we believe I think so as we are moving into budget, I think so Positions are seems to be lighter because there have been some bit of a panic in mid caps where we have already seen a 4% cut from the high. So we believe yes, things looks to be volatile, but more likely I think so. Budget post budget, we believe I think so. Market should be more of a range bound consolidation in this range of 24,200 on the downside. On the higher side, again we believe 24,700 will act as a stiff resistance in the near term. Closing above 24,700 will further fuel the rally towards 25,000. Else, consolidation in this range of 24,200 to 24,700. So, more likely, I think so. I believe market is likely to consolidate in this range for some more time before the next leg of upside.
Okay, Dharmesh, let's take it sector by sector. The last 24 months have been fantastic for PSU stocks. It started with the rally in the banking sector. PNB, Bank of Baroda, Canara Bank took up the charge, and then defense stocks such as HAL, Mazgaon, Cochin, Garden Reach joined the party. And now you have PSUs of all hues and colors having a wonderful time on Dalal Street. Do you think this rally is overstretched? The PSU index in itself over the last 6 months has appreciated 42%.
Yes, I believe I think so the sector has been the clearly outperformer for the last 6 months. But let us understand, go back to the history. I think so. Every bull market has their own leaders. If you go back to 1990, 1991, I think so, world economy were the leaders. 1999 was the leaders of bull market were IT. 2003 to 2008 it was more for real estate infra. And then coming back to 2021, 22, this bull market. Clearly, PSUs are the leaders and they will continue to be leaders going forward also. So we believe, I think so, yes, we remain to be constructive, positive for PSUs. Yes, there will be the times of corrections which is required because you cannot have a V-shaped recovery all the time. You should be having a bit of a zigzag movement, and that is what is happening in the PSU. So I believe structurally PSUs are positive; they remain to be positive. One should definitely look these dips to be buying opportunity, like sectors like defense, railways, or something like oil and gas. So these are the sectors one should definitely look also. So we remain to be positive for PSUs from the long-term perspective. Yes, the short-term, the sector has been overbought. What we are seeing is nothing but a more of a profit booking in the current.
Okay, Dharmesh and Chirag, I'll request you to hold your horses. We'll shift focus from the markets and come back to North Block. Chetan Bhutani joins us from North Block in Central Delhi. He's the associate editor at BTTV. Good morning to you, Chetan. I'm sure it's extremely humid on North Block, but today is an exciting day. Tell us what you are looking at. Has Finance Minister Nirmala Sitharaman reached her office in North Block?
Well, good morning, Shell. Well, of course, it's very humid out in Delhi. Chances for rain, but of course, we're all only waiting for Nirmala Sitharaman's the much-awaited budget speech. Well, yes, absolutely. Action is top-notch at North Block. Nirmala Sitharaman is yet to reach the finance ministry. The MOS Finance has, of course, reached the ministry. Talking about the various sectors that the budget could focus on, Shell, is the fact that two main sectors that the government will continue its focus on. The first is, of course, the road sector. The second is the railway sector. Both of them actually combine and have combine 47% of the market capital, capex. Also, secondly, Shell, what the government will be doing is allocating about 10% further to ensure that highways ministry gets about 3 lakh crore rupees worth of investments and 3 lakh crore of allocation as well. Secondly, what the government would do is, of course, railways, again 3 lakh crore allocation would be done. Shipbuilding would be promoted, and other sectors like defense, Make in India for defense sector would further be promoted, and 10% allocation would be done, Shell.
Okay, and Chetan, as you describe various allocations that will be happening 2.5 hours from now, Finance Minister Nirmala Sitharaman has left her residence in Central Delhi. There was a convoy of white cars that you just saw, and is now headed your way, Chetan. I'm sure over the next 2 or 3 minutes you'll see a convoy of white cars halting in front of Finance Ministry. Chetan, a couple of more questions from your side. Can you please help our viewers understand the kind of allocations that the railways has seen, the housing sector has seen, and more importantly the infrastructural build that has happened over the last 3.5 years? Do you see those numbers going up in the document over the next 2.5 hours?
Well, absolutely, Shell. If we could talk about the railways got 2.78 lakh crore rupees in the interim budget 2024, and in the July upcoming budget, we expect a double-digit hike for the railway sector, because remember, the government has to build new tracks. They have to develop the new infrastructure, make it more safer, develop more stations, and of course, remember 673 crores individuals traveled by train in the last year. So, a huge amount of work that has to be done on the infrastructure side of ticketing. Of course, IRCTC is something that has been working on that front as well. So in the coming 2 to 3 years, of course, the government will be keen to enhance its focus in the housing sector as well. The government also mentioned about housing for all and the PM Awas Yojana. The housing allocation for that particular scheme will also be hiked, what my sources are telling. So let's wait and watch what the big budget speech has to say about all these two sectors.
Okay, and Finance Minister Nirmala Sitharaman will be shortly reaching the Finance Ministry. I'm sure Chetan will be on top of it. Let's get back to Chirag before we let him go. Chirag, my final question to you, and a very quick one. Two stocks which, according to your research, should be watched in today's market play ahead of the budget.
See, since the starting of this interview, I have been harping on one theme, that the government should not tinker the capex momentum that it has set over the last 5 years. And my bet is that if you are playing the capex cycle, and capex cycle is the way to go to India to make the third largest economy, probably L&T is the most preferred bet in that particular environment, because the kind of diversity, the kind of execution capability, the management bandwidth, and the kind of balance sheet these guys have, probably L&T is the best capex play in India. So that is number one bet for me. Secondly, on the PSU bank side, which we are already positive, probably SBI looks quite undervalued to us and underrated to us, because we believe, apart from the banking operation, which is top notch in the PSU space, probably they do have a lot of subsidiaries which offer a lot of value. Let's, for example, say SBI Mutual Fund or SBI Insurance, General Insurance, etc. So probably, and the kind of valuation that these are trading at compared to mid caps or the relative pairs in the sectors, it's quite abysmal. So I believe there's a lot of room of earnings catch up and a lot of room of re-rating to happen in both these stocks. So in the large cap space, this would be my two top bets.
Okay, ladies and gentlemen, India's largest constructor, which is Larsen & Toubro, a part of the 10 index heavyweights that we track, is what finds preference from Chirag. And of course, India's largest public sector bank, in fact India's largest bank, State Bank of India, is something that finds fancy with Chirag. Thank you so much, Chirag.